Okay, week 30 outlook number 2, beginning with the pound futures. We have some developments here. In the last outlook, we discussed we wanted to see if price were going to invalidate this area of interest or if it were going to give a favorable response to send price higher. Well, we actually got the invalidation, but also something to note is the fact that we are actually in some sort of price leg here existing from this low up to that high. And so all this pullback to me after reanalysis is actually just to balance out whatever was in this price leg whatsoever. But also something to notice as another perspective is the fact that even though we invalidated this area of interest, this is also a liquidity point. And so we need to assess the structural action that occurs at this liquidity point because this is a low and it actually ends up being a liquidity draw. And then right after that liquidity draw, we got another liquidity draw. So we have two liquidity draws back to back, which means that there is some sort of bullish presence inside of this area, which makes sense because we're actually inside of a bullish price leg existing from this low here up to this high here. So because of that, we're getting a lot of consolidation because we've hit the very deep discount and a lot of bullish presence to send this higher. So now what we should be expecting is if this bullish price action is to continue, we will respect the liquidity draw, we will run higher, and then we'll assume or expect some sort of price action, bullish price action, and possible opportunities to enter to send price higher. If not, then we'll look for price to continue lower. Now, if we're going to expect it to continue lower, remembering that we said we have the liquidity draw and then we're waiting for the area, or not the area, the action and mitigation to occur in order to frame up trade setups. Well, we have that action here. Oh my gosh, I do this every time. We have that action right here existing inside of this inefficient pricing. And so we got 100% fill of the inefficient pricing, and then now we have this area of interest for potential selling opportunities. Now, we are in a very crucial spot because we have validation of the area of interest or creation off the liquidity draw here, action mitigation, invalidation of this liquidity point, followed by, we have validation of the liquidity draw model followed by, because of this action mitigation that led to the creation of this price gap, that also led to invalidation of this bullish price gap. But because we are inside of a bullish price leg, we end up having two structural actions occur back to back where we have a liquidity draw and another liquidity draw. So that's two liquidity draws versus validation of a sell side liquidity draw with an action and mitigation. So we have two actions versus two actions coupled to each other if you want to keep it that simple if you're tracking. And so what we should be looking for is either this liquidity draw, which is the most current, is going to sustain by invalidating this price gap here for sells, or we get actual mitigation of this price gap and we send price lower. So it's going to be a very interesting next couple days as we move toward, or as we look for this price action to develop. I would not be surprised if we do get continuation of bullish price action because of the nature of what's going on. But those are the two scenarios. Scenario one is looking for continuations of sells based off mitigation of this price gap and going lower. Scenario number two is looking for continuation of buying opportunities based off of the two structural actions, which are liquidity draws to send us higher. All right, so that is 6v1. I hope that made some sense. All right, NASDAQ. So as we discussed, we would be looking for continuation to continuation higher, aiming towards these liquidity point, which are relatively equal highs here, but mainly this liquidity point here. And we discussed that all we did was shift the structural point to this low, and then we also had an action and mitigation, which actually ended up failing. Because we have the action mitigation, there was no area of interest that was created following the mitigation of this, and as you can see, we ended up actually running higher. And then, because we ran higher, we actually ended up getting an action mitigation on the buy side here. Okay, so because we have that action mitigation, now what we should be looking for is continuation of price action to move higher if this is to sustain itself. And if not, we'll look for invalidation yet again to continue lower. But the price action seems pretty solid for right now based off of the response from this price gap here. We should be looking for price to continue higher. we'll look for developments and go from there. All right, and then on the Dow Jones, we actually ended up invalidating the most recent price gap following mitigation of these price gaps. And so right now, we're just at the mercy, I would say, of pure price action. Everything seems pretty much balanced. The only thing that would make sense to me is for price to actually return to mitigate this liquidity point here on the high side, because these are relatively equal highs. And if price fails to show continuation lower, then what we should be looking for is continuation higher. And now something also to note is the fact that even though we invalidated this area or in spite of invalidating this area of interest, we actually had an action and mitigation here on the buy side, and then following that, we created a price gap, and that price gap got 100% mitigated. So there is a very good confluence here for sending price higher, with the target aiming to be this liquidity point, which is a part of these equal highs. All right, so that is week 30 outlook number 2. I hope you guys learned something. Peace.